So is this something to be concerned about, especially now that meme stocks are trending again? Alright, now before we talk about what Jerome Powell just said as of a few hours ago, and my own investing plan throughout the rest of the year, there is another topic that is impossible to ignore, and that would be the stock market. Here's the thing, objectively, stocks have done extremely well this year. Like, despite the dip, the S&P 500 is already up over 7%. We've consistently hit brand new all-time highs. And people are now believing that we're in a brand new stock market bubble. So what's going on? So is this something to be concerned about, especially now that meme stocks are trending again? Well, even though some strategists believe that AI mania is worse than the 1990s tech bubble and that the S&P 500 is growing increasingly concentrated within the top 10 companies, keep in mind that back in 1999, the tech giant Cisco traded at more than 200 times earnings, whereas today our largest company, Nvidia, is trading at only 40 times earnings, suggesting that things were not as bad as they once were, but it's something to keep in mind, just in case. On top of that, even though there could be cause for concern, a separate analysis found that a few companies leading the way in the S&P 500 could actually be good for future profits. Why? Well, since 1950, it was found that a rising concentration led to even higher returns, especially since those were the companies generating the most revenue. However, in terms of what will actually happen over these next 12 months, it's really anyone's guess. For instance, BlackRock noted that there are several $1 trillion worth of cash sitting on the sidelines, patiently invested in short-term treasuries that have yet to be deployed. And this new wave of meme stock investing is simply fun money that investors don't have any other use for. This is partly why Morgan Stanley reset their price target of the S&P 500 to 7,000 in 2026. Goldman Sachs sees 6,600 in range, and several others anticipate the chance of the S&P 500 reaching higher than 7,000 as tariff concerns begin to alleviate. Plus, historical data shows that all-time highs are really nothing to be feared. Instead, they're a natural part of investing that tends to lead to even more all-time highs in the future.